House hunters in some areas of Canada are seeing properties go on for a 15% or more discount compared to just February of 2022. And if you were in a state of looking to buy earlier in the year or are still looking to buy, you're likely wondering, Danish, when is a good time to pick up some deals? And you're likely holding off on a purchase, waiting for an even bigger discount. If this sounds like your situation or someone you know, I want to hear from you in the comment section. How much of a discount do you want to see before you jump in if you're looking to buy? Two key ingredients have thrown our Canadian housing market into a state of chaos, even more so than what most industry watchers and market predictors were expecting. Any guesses on what those two key ingredients are? No? Well, let me break them down for you. One is sky-high rise in interest rates. Two is our stubborn inflation rate. And as it stands right now, sellers fall into two categories. They're either refusing to budge and just holding their ground, thinking that what is happening is just a really bad dream, or they feel the ground underneath them moving and are trying to make deals close as quickly as possible before their deals give out and prices fall even further. If you've recently purchased a property either for your own use, to flip, or as an investment/rental property, you're just hurting. Based on the recent rate hikes we're seeing, some monthly mortgage payments have gone up around $1,000 a month, and it doesn't stop here as we're expecting even more rate hikes to come through. I'm truly sorry for your situation. I am. I've been sounding the alarm on this channel for a long time now, saying that this is going to happen. Let's do our best to prepare for the inevitable, that prices will fall as soon as interest rates start going up. But what's really interesting is that if you take a look at some of my older videos and go to some of the comments, a lot of comments were like, there's no way Canadian real estate prices can ever come down because Canadian real estate only goes up in one direction, and that's up. So if you're interested in a trip down memory lane, it might be fun to check out some of those older comments. Now, obviously, not the entire country is feeling the pain or is in the same situation because Canada, as you know, has many regional markets, or as you should know, has many regional markets. Those two key areas that are really hurting right now are Toronto and Vancouver and their surrounding areas. They're the ones that are really feeling the bulk of the pain. Calgary, on the other hand, is a really interesting story altogether. In the last 5 years or so, they either saw their housing market stay flat or actually decline. And they only recently saw a lift in prices as many priced out buyers from Ontario and BC started focusing their eyes and set their eyes on Calgary. Sales and prices have fallen mainly in Ontario and British Columbia, which makes sense because during the pandemic, that's where prices went up the most. Reduction activity is actually the hardest in the Greater Toronto area, and that's because this is where all the investors, all the amateur mom and pop investors, played a large part picking up properties over the last year or so. This downturn we're seeing in the housing market is part of a worsening picture across Canada, as sales and prices have continued to decline throughout May, throughout June, due to the sheer weight of these interest rate hikes. Some GTA buyers also likely purchased properties before they sold their own properties, thinking the market would just remain hot and prices would just keep going up indefinitely. Those sellers may be now forced to accept lower prices just for the sake of completing the deal without having to get lawyers involved from both sides trying to sue one another. I'm expecting this weird dynamic between buyers and sellers who are caught in the middle of the shift to sort of run its course not before too long. If you're waiting for prices to fall even further, well, I can tell you based on the data and analytics that I'm seeing, I'm expecting, pretty much very likely, that prices will continue to decline throughout the rest of the year. And this is purely a reflection of expecting to see higher interest rate hikes, some of which we've already seen, and some of these interest rate hikes are yet to come. According to a recent survey, only 19% of potential first-time buyers are actually expecting to buy a home in the next 2 to 3 years. Compare that to 30% of potential first-time buyers expecting to buy in 2021. The percentage of homeowners who are actually looking to sell because they're expecting prices to fall even further, so may as well take advantage of whatever price they can get right now, is now at 23% compared to just 11% compared to a year ago. The shift is happening right now as we speak. Buyers are starting to disappear, and more sellers are now starting to hit the market. I was recently talking to a real estate agent from the Halton region, and they told me that the clients that they're working, a lot of the homeowners that they're working with, are preparing their properties for sale before the fall market arrives. According to them, it's very, very busy right now. A lot of people are just straight up panicked and they're having to make tough and very hard decisions. This is news coming straight from the ground, straight from those who are deeply involved in our housing market. People are just straight up worried and panicked, and they're having to make tough calls. Here's an example coming straight from the Halton region, straight from Burlington, Ontario. The average price of a freehold property now is $1.43 million. Well, what's the problem with that? $1.43 million is a lot of money. Well, that average price, used to be $1.5 million back in just April. And here's what's really interesting. Back in March, that average price used to be $1.6 million. So meaning In a matter of 3 to 4 months, the average price has fallen close to $200,000. That's a lot of money. $200,000? That's close to 4 times the median salary in Canada. Just imagine losing 4 years worth of your salary in just a matter of months. It's no wonder why people are worried and panicked and are having to make very tough and hard calls. Buyers and potential buyers have been waiting for this day. They're now getting their power, their buying power back. They're now seeing some great opportunities out there because people need to sell. Today, properties have been sitting on the market for 30 days, for 50 days without getting any offers. Yes, you heard it. Properties are now starting to sit on the market for 30, 50 days with zero offers. You could in theory argue that there's another way to look at this pricing decline. Prices have declined because of an overheated market, not as an accurate reflection of the actual value today. In other words, this is not money that people have actually lost because it was never theirs to begin with. It was all as a result of this emotional market sentiment. We're going through a housing market cycle right now that honestly was much needed. Our housing market was in way over bubble territory. It was way overheated. Like it was running way too hot. Things needed to cool down. This is the result. What we're seeing today is a result of this cool down. Just a quick thank you to all those who've joined the channel's membership. This content is here thanks to you. If you'd like to continue supporting the channel, all the info you need is in the description. So how much worse can it really get? Well, if we take a look at another housing market facing a similar crisis, it might give us an indicator. In China, many home buyers are actually refusing to pay their mortgages because many property developers are now delaying and dragging on construction projects. This is just adding to the country's real estate crisis, and there is a major risk of bad debt for Chinese banks. Buyers of 35 projects across 22 cities have just decided to stop paying their mortgages altogether as of mid-July. And again, why is this happening? Because this is due to project delays and a drop in real estate prices. People not paying their mortgages, this is just another storm in the making when it comes to real estate crisis. This will deeply impact a country's middle class. This is a legit threat to social stability. Chinese banks have no options but to prepare for these challenges. They are bracing for impact because of these home buyer defaults that they're expecting. Will something like this happen in Canada? What do you think? I want to hear from you and from the comments. I personally don't think we'll see something like this, at least to this extent, happen here. It's hard to say for sure, but I just don't think something like that can really happen. But again, no one knows for sure. We're going through a very interesting time right now. The last 2 years, the major story was that there was pretty much no inventory available for sale when it comes to housing. That there was a supply shortage and that's why prices were skyrocketing. Then there were folks who ended up buying a third property right after they bought their initial property because they were just riding up our hot real estate market. And because now these buyers already live in a home, they can offload their second, third, or fourth properties without having to buy another property. This is known as shadow inventory, and it's just now starting to hit the market. This shadow inventory has come at a very interesting time right now, just as prices are dropping and mortgage rates are going up through the roof. Not to mention, price reductions are also getting things moving. It's just the beginning, but it is happening. Sellers are trying really hard to get buyers to come even take a look at their property because foot traffic has pretty much just disappeared. And bidding wars? I want to say they have receded into, fond memories? If you can somehow get a deal to close, even if the price of your home has fallen, you are honestly one of the very lucky ones. There is a sudden reset happening. Both buyers and sellers are coming to grip with this new reality because prices are not going where buyers are, and buyers are around here somewhere. It's just that there's a lot fewer of them. Everyone seems to be pretty much on the sidelines just waiting and waiting for a bigger and bigger discount. And the buyers who could buy, those infamous cash buyers, you know what I'm talking about, wink wink, even they don't want to buy at these prices. No one wants to buy at these prices because now that the craziness is finally starting to hit side of our crazy housing market. Because no one wants to overpay at the crazy prices we saw because what was a totally insane housing market. I honestly feel like if you stay real quiet, you can actually hear the air coming out of our housing bubble. But there is this one group recently making headlines, and that group is Blackstone. And if you don't know who they are, Blackstone is an American property giant that owns billions of dollars in properties, somewhere around $900 billion or so. Anyways, back to the point I was trying to make. They recently announced that they're planning to expand their Canadian operations last month. They are significantly planning to expand their portfolio of Canadian real estate assets. Well, what sort of Canadian real estate assets are they buying? I'm glad you asked. They'll be focusing on industrial space, multifamily rentals, and purpose-built student rentals. According to the real estate director, the company sees an opportunity to acquire, and in some cases develop, industrial space, office space, and rentals in several Canadian cities. This is exactly what the real estate director was quoted saying. We have scale capital, and that allows us to invest heavily when we get excited about certain assets. Our hope and expectation is that we are going to grow our portfolio significantly in Canada in the coming years. Looks like the sharks have come out and they are starting to circle Canadian real estate waters. They smell blood, or in this case, they smell real estate deals. To date, Blackstone owns approximately 400 properties across Canada. Majority of it is industrial and warehousing space, but some of it is also office towers. Fun fact, if you went to Queen's University, it's a very real possibility that your student rent payment likely went to this trillion-dollar company. That's because this company, Blackstone, has a particular interest in developing and owning purpose-built student rentals in smaller Canadian markets such as Kingston, Ontario, home of Queen's University. Their business model is to find communities in Canada where there are major universities, but not enough supply and purpose-built student housing/rentals. Since the start of the pandemic COVID-19, a lot of institutional investors came under fire for buying up single-family homes and turning them into rental properties. Back in 2008, during the subprime mortgage crisis that happened in the US, Blackstone purchased close to $5.5 billion worth of single-family homes just to add to their rental inventory. As of right now, they're not expecting to do the same in Canada, meaning they're not expecting to buy up single-family homes for the sole purpose of turning them into rental units. They are interested in rental housing, yes, but they are interested in multifamily rentals along with purpose-built student rentals. Interestingly enough, you too can get in on this if you're interested. That's because Blackstone is a publicly traded corporation, meaning you can buy shares on the stock market if you are interested in becoming a partial owner, aka a shareholder of Blackstone if you want to participate in their profits. I think this is where the old saying comes in: if you can't beat them, join them. Thank you so much for watching. I hope you had some meaningful takeaways from this video. Make sure to hit that like, subscribe, and thanks button. And make sure you check out all the links in the description below for some amazing discounts and sign-up bonuses. These are products and services I use on a daily, so I highly recommend you check them out. All the details you need are in the description. That's it for now. I'll talk to you in the comment section.